The auditor's responsibility to consider fraud in an audit is covered in ISA 240. There are 4 key principles that we need to address in ISA 240. In this clip, we will look at the first 2 key topics. That is, understanding the difference between fraud and error and knowing what the auditor's responsibilities are in relation to fraud. Fraud is defined in ISA 240, paragraph 11, as an intentional act by one or more individuals among management, those charged with governance, employees, or third parties involving the use of deception to obtain an unjust or illegal advantage. We can break down the definition into 4 important criteria that, if present, would likely indicate the existence of fraud. The 4 criteria to our definition would include an intentional act by a person working with or related to the entity who employed some sort of trickery or dishonesty and received some form of unfair and undeserved gain or advantage. So fraud is characterized by the fact that it is an intentional act. This means it is deliberate, planned, and/or premeditated. On the other hand, an error is a mistake. It is an unintentional act. In other words, it is a miscalculation or blunder. As humans, we all make mistakes. This does not automatically insinuate a fraudulent act. The next key topic of ISA 240 is the auditor's responsibility in relation to fraud. It is very important here to not confuse management's responsibility relating to fraud and the auditor's responsibility relating to fraud. Many people automatically assume that the auditor is responsible for detecting fraud during an audit. However, management of the entity is primarily responsible for the prevention and detection of fraud. If you think back to the objective of an audit in terms of ISA 200, the auditor is responsible for expressing an opinion that the financial statements fairly present, which means that the financial statements are in compliance with financial reporting requirements and are free from misstatements due to either fraud or error. Thus, the auditor's responsibilities relating to fraud is linked to the audit objective of expressing an opinion on the financial statements. That is, to the extent that the financial statements would be affected by fraud and the audit report modified. The general responsibilities of the auditor in relation to fraud therefore requires the identification of risks of material misstatements due to fraud, the need to obtain sufficient appropriate audit evidence in relation to those risks, and to respond appropriately. You should note that these are only general responsibilities. The specific responsibilities relating to fraud, for example, the need to have discussions among the engagement team and perform specific risk assessment procedures, are covered in ISA 240, paragraphs 15 to 22. You should read these references and create your own spider diagrams if need be.